Hello, people. How you guys doing today? Can everyone hear me? That's good. That's good. So today, we're going to look at the Elliott wave. So some of you guys may have heard of the Elliott wave, and also CCI. So Elliott wave is a method of counting waves, and the CCI is a oscillator. We'll just leave it a couple of minutes for in case a couple more people are trying to come in. If you guys have got any questions now, you can answer. So you can ask me the questions now, and I'll just answer a couple of them now. So let me know. Do you guys have a good trading week? Do you have any problems in the trading this week? Or just let me know. Okay. Have you guys heard of Elliott wave? And does anybody use Elliott wave right now? But it's not too difficult to start using once you understand it. But I'll make sure that I can show you guys in a way that you can all understand it, so it's not too hard. And you can actually apply it to your trading, as it's a good tool. But I'll jump on it now. So firstly, I'll start off by explaining Elliott wave. So as you know, prices moves in waves, so up, down, as you can see. But there's actually a method and there's a way that you can actually count waves. So I'll start off by using the whiteboard so you guys can see this. And basically, can you guys see the whiteboard before? Everyone can see the whiteboard, okay? So the way that you can show how Elliott wave moves in waves. So for example, generally price moves like this. You guys are familiar with how the price moves. I know this is an exaggeration, but I'm sure you can understand what I actually mean. Okay. So what Elliott wave does, it's a way of counting waves. So how you'd actually do that is you do 1, 2, 3, 4, 5. And on the fifth wave, as long as you've counted the Elliott waves correctly and counted the waves correctly, you can predict a correction. A correction goes A, B, C. And then again, you can expect the previous 5 waves to continue. So it goes 1, 2. Oh, wait there. The mouse went a bit funny. Start again. So it's 1, 2, 3, 4, 5. The fifth wave, you can expect a correction, which is A, B, C. And then you can expect a continuation, which is 1, 2, 3, 4, 5, and then A, B, C. So does that make sense at the bit then? Okay. So that is a clear example, well, in written form of how you'd actually count waves. So now moving on to the actual chart itself. Well, are there any questions at the minute? No questions? Okay. So now when you go onto the chart, I have found a few examples. Let's look for these examples now. These ones I actually had to find earlier because, as you will know when you actually test these out, because everything that I actually show you guys, I do recommend um, taking into practice straight away to try and find some examples. There is a question, 1 second. Yes, David, this is Elliott wave. I'll go over the whiteboard explanation again, but at the minute I'm just going to show an example of it on the chart. So now, if we go back to what I was showing you on the whiteboard, if we count from this low here, you can go 1, 2, 3, 4, 5. So each, going back to the whiteboard now, you'll see each high should be higher than the previous high, even though this one is only slightly higher. So if I use this now, I'll do 1 here. So that's 1 wave, 2, 3, 4, and the last wave being the 5th wave. So once you have the 5th wave, you can expect a correction, which should be A, B, C. However, the correction isn't completely showing a correction of the A, B, C that I mentioned. However, with this is something that I have found with the Elliott wave theory, is that it doesn't work to a T all the time. However, as long as you use it correctly and you're using it in a way that you can actually count waves, if you can count the 5th, well, for example, if you knew that this was approaching the 5th wave and you've already had a previous high, I'm not sure, maybe there could be a level of resistance around here, well, clearly because price was pushed down, or there could be some divergence if you used a oscillator, or if you had a reversal candlestick pattern. But as long as you knew that it was on the 5th wave, you could expect a market sell-off. And if you did predict that based on the Elliott wave theory, then you could have potentially got over 1,000 pips, or at least 1,000, well, depending on how you calculated this. Remember, this is a daily time frame. Based on my experience again, I found that the Elliott wave does work better on higher time frames. It's most famously used by a trader called Paul Tudor Jones. He's a big trader, runs a hedge fund, a billionaire, and he uses the same theory. There's actually a documentary that he has, like it's quite an old documentary, but it's very interesting to watch, and you can see how he makes a big trade simply based off the Elliott wave theory. So for some people that don't actually believe in the Elliott wave theory or don't actually believe in technical analysis, if you check out Paul Tudor Jones, he's a perfect example of somebody that actually uses technicals and uses this particular technical tool to his disposal. Paul Tudor, I'll write it, Paul Tudor Jones. But it's one of my favorite documentaries. You can check him out now. He's a big billionaire. So yeah, did everyone understand this example when I drew the Elliott waves and I counted the waves on the actual chart? Everyone understand how I counted the waves? Like 1, 2, 3, 4, 5. Well, in theory, the third wave should be the longest. This is like, again, I had to find a perfect example of this. And the third wave should be the longest. So, for example, that would help you again. Counting waves, if you do count waves correctly, you can also use Fibonacci within the waves. For example, if you know that you are actually in Fibonacci, you can count the waves. And if this is the third wave, you can predict that. Let's just get this Fibonacci. If we drew the Fibonacci, you can see that it retraced between the 38.2 and the 66.0 level. So it found a level of support within here, and then price went off. The third wave should be the longest wave, yes. However, it's not always the case. But if you can find a perfect example, and you do know that you're in the third wave, it's good knowledge to have, because for instance, if you bought around this price here, and then you can see that price made a high, but it's got a level of resistance. If you actually knew that if you was using the Elliott wave theory and you knew that you was in the third wave, you'd know that the third wave will be the longest. So how that could help you, it could stop you from cashing out your profits too early, and essentially you just wait it out and see that eventually, if you just held on to your position, then you could potentially, instead of cashing out this little amount of pips here, which is 170, if you held on all the way because you knew you was in the third wave, you could potentially get over 800 pips. Again, this is on the daily chart, and what I've found is that the Elliott wave does work best on higher time frames. However, all the technical tools that I do show you guys can be used across all time frames and all currency pairs. So does this example that I showed make sense? Or do you need me to explain something on it again? Probably just highlight it. So the first wave, yeah, the third wave should be the longest. So this is the first wave. You got one, this from the low to the high there, it's one. Then you have a little pullback, two. Then from the pullback to the top, you have three. So that's the long wave. Then you have another pullback again, four. And then finally, you have the fifth wave, which is here. And again, it's not a perfect example of the ABC that I mentioned going down. But again, as long as you can calculate or use the Elliott wave to help you identify the number of waves, if you know that you're approaching the fifth wave, and say, for example, you bought from down here, but you knew you was in the fifth wave, it would be a good idea to probably lock in profits or potentially cash out profits, as you know that it's likely you're going to see a correction. And as you can see, for example, if you was down here and you bought around down here at this level of support, you could have potentially held out to just over 1,000 pips. However, some people like to think because it's gone 1,000 pips your way, it may go 2,000 pips your way. And again, what a lot of you may have experienced is you end up being a lot in profit, but because you don't actually cash out your profit or manage your position well enough, you end up leaving the trade with nothing. So by using Elliott wave, and if you knew that you was on the fifth wave, you could see that you're likely to see a correction as in an A, B, C. So you'd lock in profit or essentially exit the trade. So does this example that I've just shown make sense? Or any more questions on it? Can the level counting strategy be used on lower time frame? It's not a level counting strategy. It's called a wave counting strategy. It's Elliott wave theory. I'll just type it. And again, I've just been briefly showing examples and explanations of each technical tool, but I'll be going over them again to make sure you guys understand it. In regards to the fear, we need to the way that you totally eradicate fear from your trading is by having a solid trading strategy and also good risk management. And by actually using the technical tools to your disposal, you can have a clearer understanding of the market, so you can see how the market's behaving rather than assuming that the market's just a crazy battlefield. You can actually see that the market does move in some kind of order. And then also, if you've counted the waves correctly, you'll also gain confidence in your ability and in your trading. It works on all charts and all time frames. All of the techniques that I show you guys and all of the technical tools that I show you can work on all charts and all time frames. Some work better on others, but it's up to you to test them out. So again, does this example that I've shown make sense? So you got 1, 2, 3, 4, 5. I'll go over it again at some point. But shall I move on from this example, or any more questions on this example? So no, any more questions? Does everyone understand it? Give me some yeses, people. Tax increase. Okay, I'll move on. So another example that I found, again, this, you can use Fibonacci as well. As I mentioned before, what I'm doing with you guys is showing you how to use all the technical tools so that you can essentially piece them all together to help you develop a profitable strategy. Paul Tudor Jones, I think it's called Trader. I've watched it a few times. I think I've got it somewhere, but you can watch it online. So I'll move on from this example now. This was on the GBP USD on a daily chart. I also have an example because I can't remember who asked me, but someone said, does it work on other currency pairs and other time frames? So we've done this on a daily time frame. There will be more examples, but I thought this was a perfect example to show you. I've got another example on Euro GBP on a 4-hour time frame. So now, if you just, 1 second. How do you count this one this time? It's a perfect example. This one's even better than before. You've got wave 1, wave 2, you go to the lowest point. So instead of going to here, you go to the lowest point there. So 1, 2, 3, 4, and 5. And then you have A, B, C. So now I'll get the trend line again to show you guys this. So we go 1, that's wave 1 here. Then you have 2. Instead of going to there, you go to the lowest point. So wave 2. But that's it. I can explain that another time. So wave 1, wave 2. Then you go from the low of wave 2 to the high of wave 3. So that's wave 3. In this instance, wave 3 doesn't look like the longest wave now. 7, 5. Then from wave 3, you count from the high to the low, that's wave 4. And then finally, wave 5 is from the low here to there. So these are the 4 waves. The 5 waves. Wave 1, wave 2, wave 3, wave 4, wave 5. I'll just put it on each. And again, even though I'm showing you these examples, I'm showing you perfect examples, you'll have to use this as a benchmark so that when you guys are starting to test them yourself or count waves yourself, you'll be able to identify them and find good examples. So far, what I'm showing you guys, does it make sense? Okay, any more questions on it? Does anybody have any questions at all on this? It says super easy to paint using hindsight. I guess that's where knowledge of Elliott wave moment gives you confidence to stay in the trade. Chris, for all the examples that I show you guys, I'm looking at past data, but I also recommend finding even more examples so that your eyes are trained to look for these certain setups. Then I do recommend trading them in a demo account and also forward testing. So trading in a demo account is actually forward testing to see if you can actually count the waves correctly. And the way that you'd benefit from this, just in case you guys don't know, is, for example, pretend that we don't know what's actually happening now. We've counted wave 1, you've counted wave 2, you can see you're in wave 3. So now you know that you're in an uptrend, which you probably should have known anyway if you're using any kind of other technical tool. And then you're in wave 4, you know that in wave 4, you should be able to find a level of support, which does happen around here. And then as you can see on wave 5, you can see that the market goes up. And because you know that if you are using Elliott wave theory and you are essentially calculating the waves and you know that by the use of Elliott wave theory, you are in wave 5, you can expect a market correction. So essentially, if you got into the trade at the low of wave 5 around here, then you know that if you do enter around here and you're at the high of wave 5, then there's no point in holding and waiting for a pullback because you're likely to have quite a strong correction. Someone said if you can use Fibonacci, let's see if it worked here. It goes against my rules here, as I always say, between the 38.2 level and the 66.0 level. But as you can see, price surpasses the 66.0 level, so I wouldn't recommend the Fibonacci use there if it goes past that level. But in regards to when you reach wave 5, you can see that you're at a level of resistance and then you get a sell-off. and then you have the ABC waves now. So I've showed you these 5 waves. It goes 1, 2, 3, 4, 5. But then what I showed you on the whiteboard, which I'll show you again, so it stays in your head. You have the ABC correction, which goes A, B, C. So I'll just show this now. A, B, C. So now that we know we're on the ABC level, you should know that its price is likely to find a level of support now, and the Elliott wave theory should continue essentially. But if we go to Fibonacci and we draw Fibonacci from the low of we draw in the Fibonacci. When you use Elliott wave theory, you can either draw the Fibonacci for the size of each wave. So you could do it for wave 1, or you could draw it from wave 2, or from wave 3 or 4. But now what I'll do, because we're using the Elliott wave theory, I'll draw the Fibonacci from the low of wave 1 to the high of wave 5. And if we look now, let me just remove some of these lines so it doesn't confuse you guys. I'll check the chat in a minute. I haven't checked it just yet, so don't worry, I'm not ignoring your question. I'm just deleting these lines so that I can explain to you guys. So again, this is like a perfect example now. So we've gone wave 1, 2, 3, 4, 5. Then once we reach our fifth wave, you can expect an ABC correction, A, B, C. Then as you can see, once we reach I've drawn the Fibonacci, sorry, and based on what I've told you guys about Fibonacci, which I will tell you again, you know that price tends to find support between the 38.2 level and the 66.0 level. And when we had the first A wave, you can see that price found support just below the 50 level, and then price went up. But then, as you know, that we're expecting, the uptrend here, or the upward move, sorry, is a B wave. You know that after the B wave, you should expect a C wave. So we have a C wave, but luckily, well, not luckily, sorry, but by the use of Fibonacci, price found the level of support around the 66.0 level. So previously, when I showed you guys about the use of Fibonacci, I did say that, well, you guys that have probably studied it yourself, people do say that the Fibonacci level should be between 38.2 and 61.8. But based on my experience and my knowledge, I know that generally price can go as low as the 66.0 level to still be considered as part of your Fibonacci. And as you can see here, that's a perfect example because we drew the Fibonacci from the low of wave 1 to the high of wave 5, and price has found a level of support at bang on the 66.0 level. So essentially, this could be the start of a continuation of your Elliott wave and of an uptrend. So you could expect a further 5 waves, so 1, 2, 3, 4, 5, surpassing this previous high here. So I hope that makes sense. Now I'm going to check the chat and answer some of your questions. Yes, other indicators can assist with help you to picking waves better. Potentially the use of moving averages, or the use of Fibonacci, or simply just support and resistance, higher highs, higher lows. Generally, if you count the waves correctly, Adeli asked, does it fail sometimes? Every technical tool is never 100% certain. However, by using them properly, there's a very high percentage that your analysis will be right. It just comes with practice in order for you to correctly count the use of Elliott wave. However, to do that takes a lot of backtesting and clear rules in order for you to use Elliott wave. So I hope that answers your question about does it fail sometimes. Raymond said, is ABC a correction then back to the upside? Yes, because as we are clearly in an uptrend, as we have higher highs and higher lows, we are in an uptrend. but the ABC wave is merely a correction. So you can expect a further continuation for the upside. And based on use of Fibonacci, I have said before, if price finds a level of support between the 38.2 and no lower than the 66.0 level, then according to Fibonacci, you can still be in the uptrend and still take buy positions. So I hope that answers your question, Raymond. Cepho said, do you start counting your levels after the market has been consolidating? You can count your level wherever, even though we're counting from consolidation here, on the GBP USD level, we did also count from consolidation, a slightly smaller level of consolidation. However, there's still a level of it, but you just literally start your counting from wherever the wave one is. As long as you can identify wave one and then count the waves correctly, you won't have any problems, or you shouldn't have any problems. Does the 5-wave equally apply to the retracement example? What do you mean by that, Chris? Can you explain that question a bit better, please? Raymond asked, does economic news void the Elliott wave completely? And the answer to that is no, because all the technical tools that I've showed you guys, and when I'm showing you back-tested data and back-tested results, it's also any back-tested data and all the data that we're looking at does incorporate all economic news and all economic factors. So even though there are economic factors happening, the technical tools that I'm showing you guys still works. So it's okay just to use technicals, but it will help if you can also use economics too. Any more questions? Awalu asked, how do you determine entry levels and exits? And that can solely depend on the way you're counting waves, and if you want to enter at the start of a wave, or if you know that a wave is going to end, like when I showed you that wave 5 was going to end, you could enter a reversal signal, or if you knew that the correction on wave 2 was coming to an end, you'd enter the continuation of wave 3. Chris said 5 waves to the upside, only 3 waves in ABC to the downside from the 5th wave peak. And yes, because if you are overall in an uptrend, so say for example, if you're in an uptrend, then you would expect 5 waves upwards and three waves down for the correction. And if you're in a downtrend, you expect to count the opposite way. No problem. So does this explanation and these 2 examples of the Elliott wave make sense to you guys? Okay. What do you guys think of Elliott wave? It is useful when used correctly, but again, some people just have a problem calculating the wave. But once you do calculate the waves, it makes you a lot of profit. And when you guys, if you do get a chance to watch the documentary by Paul Tudor Jones, you can see how he actually really does make a lot of money by the use of Elliott wave. And yes, Joe, it does work good on long-term time frames. However, it can work on lower time frames, but all the technical tools do work well across all time frames and all currency pairs. So any more questions on Elliott wave? Would be good. Yeah, it works well with the Fibonacci, because on this example here, Daniel, you've got the upward move, so 1, 2, 3, 4, 5. Then you have the A, B, C. But as you know, we've drawn the Fibonacci from the low of wave 1 all the way to the high of wave 5. And as you can see, price has found the level of support at the 66.0 level, like bang on the level. And I've already told you guys about the Fibonacci, but again, I'll be going deeper into Fibonacci or showing more examples. And as I only showed you guys a few examples. So does that make sense to everybody then? Okay, that's good. So now I'll find an example. I'll show you guys the CCI indicator. It is an oscillator. You can find it by pressing insert, indicators, oscillators, commodity channel commodity channel index, which is CCI. Have it as default. This is how it will appear for you guys. Press OK. That's how it appears at the bottom. It looks quite similar to the RSI. You have the 100 level and the minus 100 level, so overbought and oversold. But what I'll do is I'll make it a bit clearer for you guys so you can see it a lot better. So this is the CCI now. It's an oscillator. It looks quite similar to the RSI. You can use it in the same way. So you can use it for divergence, or you can use it for simply overbought and oversold. The way you'd actually do that is if the CCI, as in this red line, if the CCI is above the 100 level, then you can say the market is oversold and you can look for positions to sell. If the CCI is overbought, as in below the minus 100 level, then it could be an opportunity to buy. So it's just showing you that the market is either overbought, as in it's likely to take a turn in the market, or it's oversold, so it's likely to take a turn in the market for the uptrend. Or you can look for divergence. And on the use of divergence, you got an example of divergence here, bearish divergence. I'm looking at these two sections there, that point there to that point there, and you can see that price is sloping upwards, but the CCI is sloping downwards. So this is clear divergence. However, even though when price was clearly overbought, and as you can see, it had little sell-off. Again, all indicators don't work all the time, but it's up to you to test and find out when they do, so it can help you. And the same thing happens here. You can see that it's clear divergence, quite similar to the use on the RSI, but they have slightly different readings. And yeah, so you can either enter the trade when the market is overbought, which means if the CCI is above the 100 level, and you can sell, or you can buy or enter a different position if the market is overbought. So over here means overbought, as in above 100 is overbought, below 100 is oversold. So does that make sense to everybody? Okay. So out of the RSI and the CCI, the relative strength index, and the one that we're doing now currently being the CCI, the commodity channel index, which one do you guys prefer? Because again, all oscillators are the same. I also showed you how you can use divergence with the MACD, and that also works. But essentially, there's so many oscillators to choose from. It's up to you guys to test them correctly and make sure you use them, and essentially you can apply them to your strategy, which can help you to consistently beat the market over time. Yeah, RSI is very similar, Daniel. But essentially, it's up to you depending on which one you feel works better. But the best thing to do is actually test and check the data, for the RSI performance, and also check the data for the CCI performance, and then choose one from there. But essentially, they're both very similar, and they both show overbought and oversold levels, and they can both show you divergence. Does that make sense then, guys? Any questions regarding the CCI? So everyone's fine with the CCI then? Any questions regarding, actually what I'll do, in case some of you guys missed it, I'll go back to the whiteboard and I'll just show you how I calculated the waves. So as you know, price moves up and down, as you already know, but price does actually move in waves. And if you count the waves correctly, you will be fine essentially. So price moves 1, 2, 3, 4, 5. On the fifth wave, you can expect a correction. A, B, C. Then you can expect a continuation of the wave. 1, 2, 3, 4, 5, and then A, B, C. And then you can expect a continuation again. And there is also waves within waves. So in this, say for example, you're on wave 1, wave 2, wave 3. In wave 3, you can also count waves within waves, but that's sort of moving on to a different level as well. You can expect that price will move 1, 2, 3, 4, 5. So you could have 5 waves within wave 3, but there are waves within waves, but that's even more advanced than what I'm showing you guys now. And it's best to take things step by step rather than to simply jump ahead. But there can be also the 5 waves within this wave here, as this is wave 5. There can also be 5 waves within wave 5. 1, 2, 3, 4, 5. And there could be 5 waves within wave 5 of wave 3. But that's when it gets very technical, and it can be done. There's loads of explanations of how it's done. And if we look at, the reason I have to show you that as well is because when we look at actual price chart, if we go back to this, even though this is wave 1, you can see that price doesn't simply move completely up in a straight line anyway. These candlesticks show you that price, was moving up and down quite in a parabolic way. And price does move down in the same way. Price never actually does move completely straight, even though you have a strong move here in wave 3, you still have little waves within the waves. So I hope that makes sense to you guys. Does it make sense what I've mentioned about how you can have waves within waves? Again, if it doesn't, you shouldn't stress too much. Again, it's only a short period of time that I've shown you guys, and I'm going to go over it a lot more as well. But you can count waves within waves. Again, it's quite an advanced technique, but if you use it in a good way, it's a very good way to help you beat the markets. Oh, exactly, Presley. Another thing as well, for example, say when the market is at an all-time high, as in it's never been there, say if price, let me find an example. Say, for example, this Euro GBP was at an all-time high. It was all over the news, and people weren't sure where price was likely to find a level of resistance. Simply, if you was a person that counted waves, you know that 1, 2, 3, 4, 5. You know that you were on the 5th wave, so you can expect a correction at any time, which you do get, and then you get a slight sell-off. So that's how you can actually use it to help you, or you can, use the Fibonacci that we showed, or use any of the other technical tools to help you do that. Or simply, you can use your trend line, as some people use trend line breakouts as entries, but simple trend line breakouts as entries aren't really that good. You need to have more. You need to have more rules behind them, or use of technicals, because like a trend line break is very basic of a strategy, and you can imagine if you're trading a lot of money, you'd like to have a solid strategy rather than just a trend line break. But what a trend line break is, you simply draw a trend line, depending on however you'd like to draw the trend line, and you say once price closes below your trend line, you'd sell. Here you would have made money, but there's obvious examples of where you wouldn't have lost money. But it's up to you to make sure you test that and see where it works and where it doesn't work. But I hope that makes sense for you guys. Again, all the technical tools that I show you, literally all of them work across all financial markets, all currency pairs, and all time frames. So that means they work on Forex, commodities, stock market, indices, cryptocurrency, work on anything. Anything that I show you guys, all the technical tools can be used across every single price chart and every single financial market, as long as you use them correctly. So, moving on then, has anyone got any questions? Yes, Ross, how you doing, man? Do you understand the use of the Elliott wave that I mentioned? Um, Presley said, "How can you differentiate an ABC correction from a trend change earlier?" And the real answer to that is you can't. However, if you know that you are in the ABC correction and you do enter on the A wave, then you're entering at quite a high position anyway, or a good level anyway. So you're in the market at a good price. If you enter on the C wave, if you entered around here, you could essentially hold your position and just lock in more profits. It's totally up to you. So that's another example as to why it's more beneficial to actually lock in profits rather than to take profit. Because, for example, um, say say if it was around this level here, you entered at this point because you saw that you're at a strong level, you saw a strong engulfing pattern, and you knew this was the third wave. But you entered at this level, and because you saw like this sort of indecision candle or inverted hammer slash spinning top or doji, you may decide to exit the trade and take profit. The only problem is when you take profit too early, you essentially miss out on all of the rest of these profits that you potentially could have got. So instead of cashing out or taking profit, I would recommend locking in profits. What take profit means, in case some people don't know, it means if you buy at this level here and you set a take profit order at around this level, it means as soon as price reaches this level, you'll automatically be kicked out of the trade and you will take profit at this level, meaning you would have cashed out your 44 pips, which is good. However, if you just locked in profit when you're using a method, you could, instead of cashing out the profit here, you could essentially have managed to catch a lot more profit and exited the trade up here. So instead of cashing out 43 pips, you could have essentially got over 100 pips. So by having a better exit strategy and locking in profits, as opposed to taking profit, you can essentially get way more profit than you would have got when you only take profit. So does that make sense to people? Okay. So you guys have learned Elliott wave in a short space of time because I've shown you guys a simple way, hopefully. If you don't understand it, we'll be going through it as well. Adjusting profits is the same as locking in profits, Daniel. Essentially, I'll show you again. If you start off in your trade, say for example you enter at this level and your stop loss was at this level, it means this is the level of pips at risk. So you could have 36 pips at risk. But if you lock in profit or adjust your stop loss, you slowly move it. So now you're risking less. Now you're risking less, and eventually you're in profits because your entry price is here, and you're slowly locking in profit. So I hope that makes sense, Daniel. No problem. Does everyone else understand Elliott wave and the use of CCI then? And we use CCI on Euro USD on the 1 hour time frame, but it can be used across all time frames, all currency pairs, all financial markets. Okay. So yeah, we've covered the CCI and we've covered the Elliott wave. Again, I've shown a couple of examples, but I haven't spent too much time. Locking in profits is basically just instead of taking profit as in exiting the trade at your take profit point, what many people tell you to do, if you take profit, say for example your entry price was here and your take profit was here, you can only cash out 55 pips. But if you use a lock-in profit method, then essentially you can get way more than 55 pips by locking in profits, and you could end up getting as high as there. So instead of cashing out only 55 pips, you can get over 160 pips. So yeah, does that make sense for people? Okay, no problem. So yeah, we've covered the Elliott wave, we've covered the CCI. What I'll essentially do is I'll speak to you individually. Remember, you can message me on WhatsApp. I've just been a bit busy since yesterday, but I'm going to get back to all you guys today on WhatsApp if you've asked me any questions. And now you can also ask me any more questions if you've got them. As you know, I always reply to you on WhatsApp. But I'll be arranging separate talks with you guys so that we can share screen and I can actually talk to you guys and see where you all are and what you actually need to work on. So we'll be using. I've got a. We can arrange that. We can talk about that on WhatsApp. But you've all got my number on WhatsApp. Trailing stops. You can use anything to trail stops. A good example is the parabolic SAR. I've done a video on it before. Just get a different chart first. There's various methods people use to trade in stops. I've got a few myself, but you can just essentially use all the technical tools that I've shown you guys in order to trail profits. Indicators, so insert indicators, trend, parabolic SAR. And the parabolic SAR is these black dots. So how you do that is if you enter that this low here or this pin bar here, essentially you lock in your profit. You lock in your profit according to these dots. So you move your stop loss accordingly to wherever each dot is, and potentially you could have got 87 pips. Chris, are you on about the trading stops on your brokerage that you can work with? Raymond, it's an okay example of a method of using how you can trail stops. However, it doesn't always work consistently, and you can throw away quite a lot of your profits. But you know, some people are happy to use them. In regards to trading stops, I have to do that when the market's open. But once you enter a trade, you simply right-click on it and click trading stops. But I wouldn't recommend the use of trading stops because, for example, you have a candle wick here that is around 23 pips. If you had a 20 pip trading stop, then essentially it locks in profit too early and you can be kicked out the trade too early. So again, I don't trading stops are quite a basic way of locking in profits. So is the parabolic SAR, but at least it's some kind of strategy. We have to sleep, Chris. You can instead of a trading stop, you can simply set a price alarm. So, for example, if you enter the trade down here and you don't want to lock in any profit until price is up here, you can just set a price alarm. So when price does reach this level, you can receive an email or you can have a sound alert. So you'll be alerted that price has reached your level. But again, trading stops are a very basic method of use for trading profits. The parabolic SAR is, again, it works sometimes, but it's not very consistent as it doesn't enable you to get the maximum amount as if you had a good profit, a good trading strategy. Some people also use the parabolic SAR as a method of entering trades. Again, it's very basic too. You can see a number of new parabolic dots form and you enter the market and then just exit it when you have an opposite form on the other side. But yeah, so I've shown you guys the Elliott wave and I've also shown you the CCI, and I hope it makes sense to you. Again, if you got any questions, you can message me on WhatsApp and I'll get back to you all on WhatsApp. But what I'm going to do is I'm going to talk to you all individually and we can go through you know, what's going on and what you actually know, because some of you guys may be a bit ahead of others, which isn't a problem. Some of you guys may only want to focus on something specific, but we'll go through that as well. But when we talk, we can share each other's screen. The same way you can see my screen, I'll be able to see your screen as well. So that's beneficial as I can see what you're talking about and I can help you out. So again, hope you guys understood what I've explained here, being the Elliott wave and the CCI. It's been a short explanation, as the other ones are short explanations as well, but I'll be going over them so you can understand them. And yeah, just let me know if you got any problems on WhatsApp, or you can message me on there as normal. and we can continue. So, any more questions? Actually, no. Just send me questions on on WhatsApp or via email, and then we'll go from there. But I hope this video, this webinar, helped you guys. The next webinar, I'm not sure, may possibly be tomorrow or we'll continue on Monday. But I'm going to talk to you guys personally on WhatsApp. You can message me as well, so that we can arrange a personal session, so that I can see what's going on with you and where you're currently at and moving forward. I'm glad you liked it, Joe. Everyone else happy with the webinar? There's a few people in the webinar, so I need more feedback. Hopefully, if you guys tell me that I didn't explain something clear enough, then I'll work on my explanations and try and make it even simpler for you. But I think that I did make it quite simple for you guys to understand. So hopefully everyone's happy, and you can go back in the markets now and find some examples. A few of you guys take pictures of them, which is good, and send me them on WhatsApp, and I just tell you what's going on, if it's right or if it's wrong, which is good because it helps you learn a lot faster as well, and make sure that you're using the tools properly. Because again, as long as you're using the tools properly, it enables you to develop, or I can help you develop a strategy. And the key to being profitable is having a profitable strategy, so you can beat the market over time. So yeah, hope you learned a lot, and I hope it helped. It will make you a lot of money as long as you get everything sorted, which you should do anyway. But yeah, hope it helped you guys, and I'll catch you. I'll send you a WhatsApp message out to let you know when the next one is, to see if you can make it. But yeah, hope it helped. See you later, guys. Have a good day as well.